So, Elisa, so we just went through 5 rate increases. We probably have 2 more coming, right? One
Yeah.
in November, one in December. By the time this airs, it'll be before the November meeting.
Mhm.
Well, I don't know about you, but we're having a heck of a time. We're seeing cap rates go up. We're seeing sellers' expectations finally get adjusted. We're seeing massively up to 20% discounts on stuff that we saw just 3 or 4 months ago in the
Mhm.
multifamily space. What are you guys seeing?
Yeah, so same with you, Ken. The capital market has really been constructed. And maybe what you don't see in Texas, what you see in Phoenix is because base price is high in Phoenix, relatively higher than Texas, a lot higher actually. And so, you kind of see not only the interest rate going up, but the amount of the lending available for a particular market may be restricted, which makes interest rate maybe even higher in that selected market. So we also invest in Texas, but not like you. We have only a few properties over there. We have found, San Antonio, for example, when we invest in that, the market isn't as restricted, but like Arizona, for the same lender, you kind of have fewer options, right? Because the lender would say, "Hey, we reach our cap at Phoenix," or we didn't want to pull the trigger. There is opportunity. There's always the yin and yang to a question, right? So it also creates some opportunities for some bargain buying. We're maybe seeing a little bit of that in that market if the debt makes sense. If the debt is something, as you always talk about, Ken, is some sort of fixed element in there, then your kind of debt expenses is fixed. And for example, you can put it in a agency loan that has a step down, that basically allow you to have lower prepayment penalty, or creating 2 layers of it. Both are fixed rate. One a little bit higher on the secondary loan, and the first loan is lower, to create that blended rate, but it's fixed. So these are maybe some ways to kind of find some great deals. And in order to find fixed rate deals, the property has to cash flow very well. So in order to do that, we're seeing maybe some more finished products that are being exchanged hand, because I'm in the multifamily value add space. We buy old properties. So in that area, in Phoenix, there's a lot of projects has already been turned. So buying these units and thinking about more of a yield play specifically, if the math kind of makes sense. So we certainly see a lot, like so much fewer projects that make sense that hit our table. And you have to kind of really dig a little bit deeper over there. So where the market's kind of going, and I do agree with you. I think there's probably maybe 2 more rise of interest that's coming up. And then we don't really know what happens after that.
We had a property, I think I shared with you, that we were in escrow on.
Yeah.
And the property was a nice value add. It was a property that needed a lot of work. It was really well located, and it actually was a bit of a pride of ownership, but the owner decided, to just keep it the way it was for a long period of time, but there's significant upside.
Mhm.
Well, while we were in escrow, our debt costs went up because the Fed met and, we're raising their federal
Right.
funds rates. And so our cash flow went from 3 million to 2 million on that one asset.
Mm.
So, it was 3 million, which was about a 7% cash on cash.
Mhm.
And then it went to 2 million just because the debt went up. So it's the exact same property.
Right.
And I was like, man, and the seller asked, hey, would you consider, just make us another offer at a lower price?
Yeah.
And I was like, we don't know where debt costs are going to go, and I'm afraid that if I do that and we close, or and then I'm now stuck with something that potentially a floater that could go even higher.
Yeah.
And so we passed on the deal and just kind of waiting for these debt markets to flush out. What do you see? Do you see this? A lot of syndicators, I think, are kind of running blind to this issue. I mean, they're starting to see it,
Yeah.
right, as the statements are rolling into their office,
Right.
and some of this cash flow goes to negative.
Yeah.
Where do you see all this playing out?
Yeah, so I think that's going to probably create, again, some buying opportunities. And I think, unfortunately, some folks are going to lose some projects. If that's the case over here, I keep up myself at night, sometimes thinking about these. Now, what we have been doing is to try to mitigate a little bit And thanks to you and the collectives, we kind of
Yep.
talked about this like beginning
We
of
did.
last year.
That's the point of the collective.
So
Yeah, is
the
to
so
sit
the
down and
beginning
talk
of
through these
last
things.
year, we have put some rate caps on our rate caps is these insurance that you purchase to cap the rate. So your insurance will pay you back the delta. So we have put some 25 base point, like which is 0.25%, the cap rate cap in the beginning of last year when it's really, really cheap to do so. And these are paying off really well now. And they're fantastic. But towards the end of the year, we don't cap it as much because the insurance has gone up. We run our numbers. That doesn't make a lot of sense. So these, we put a lot of reserves on them. I think reserves can help you. So for the syndicators out there or people who's investing into syndication, you should ask your syndicator, how much reserve are you raising in addition to this to cushion this rising of interest if you're going to take a bridge loan? But we've seen bridge loans are going 7.5, 8. Like at that point, you're like, hey, look at some different creative financing. And I think for people who invest in these projects should, ask what is your reserve? Do you have interest rate cap? And also, how are we mitigating this using fixed rate debt? Is there ways to kind of mitigating that? So for folks who are
Yep.
not looking at that, if you have very, very little reserve, then the investor may be expecting a cash call, which is, they will ask for more cash. But usually investors don't put in extra money if it's not doing well, unfortunately. And so we may be seeing some project kind of falling out.
You hit a ceiling in corporate. And I think a lot of people do that. What happened to you specifically and what made you go, you know what, I've had enough of this?
Yeah, so I didn't quit cold turkey. I kind of slowly planned my exit. But there's a few pivotal moments. And kind of to share personally, it's like there's a certain band I supposed to become a senior. And it took me forever. When I compare with people who I started with, I was like, okay, we all accelerate to this level, but that senior band, I just couldn't knock it, right? Because it basically was told to me, you got to play more politics in order to get there. But that wasn't really my passion. I really had a passion for like creativity and building, come up with a great solution to resolve issues. But politics is not. It's more like procedural. So for me, it's combination of that and my daughter was born. Then you're like, what's the point at some point? And also our passive income on the site with single family. Single family actually don't make a lot of passive income from a cash flow perspective, especially if you're on a coastal market. I'm in Seattle, so it's a very much appreciated market. So you don't see a lot of cash flow, but there's a pretty big equity gain during that period of time because we bought it right in the right market. And that kind of just dwarfed the income. But for me, it's also like something has to be excruciatingly paying for you to switch it because you feel comfortable. You're comfortable. This is all you know. I think it is the unknown that is really scary. And to a lot of people, it's beating into my head growing up is getting a job, being stable is looked upon now. And also if, there's so many stories that they share with you, like so-and-so went and did a business, went bankrupt. Right. So did that. So it was like, ooh, I'm not sure. And my parents are very conservative, being Asian. They're very conservative. Like, are you sure? You're going to quit your like a really good job. Right. So it's the golden handcuff, really. Yeah.
How did you get your friends and family and your I met your husband, by the way, he's awesome. But how did you get like all of them on board? Because I know, because it's almost like as my buddy says, it's like right now you're in the bay,
Yeah.
and now you're out in the ocean. And that's a nice analogy, because in the bay it's very safe, but now you go out into the ocean, and everybody perceives it as extremely risky, except for probably now they're going, oh, okay, yeah, I supported you all along, right,
Yeah.
right. But in the meantime, don't you feel that resistance and guilt and questioning and all that stuff, and it chips away at your mindset, right?
Yeah, definitely. So first of all, I do not share that with my parents until I was successful. So I think that was really good. And because I didn't, I kind of set it up in the slow way where I didn't just like quit in day one. And I think that's actually probably a better way for people who want to kind of ease into it versus quit day zero, because now you have the stress of making money, etc. So I kind of slowly increased the portfolio. And also real estate investing is awesome because even though you're actively participating in there, is still passive income. So relatively, instead of taking another job, it's relatively quite low hours on your first couple project. And also part of what my husband does is I actually included him. He was really handy. So he renovated, as mentioned before, he renovated the first two units. And we realized that we don't work very well together. And that, but you kind of see the economy kind of works. And I kind of try to show him the numbers, even though he's not very interested in that. But we kind of essentially created a team. He is coming from the builder's background, so it is a little bit resistant because he's seeing his dad lost it all. His dad was a developer, lost it all, and then never came back because his dad never tried again. One key on entrepreneurship is like you just take your failure and get up and redo it again. Some people never get up. So that was kind of how I get them signed up. And with my parents, literally, I didn't tell them what I was doing until it was a certain size of portfolio. That I'm like, hey, I'm going to make the jump. And funny story over there too, my dad retired the same year I retired, technically retire. Retirement for me as entrepreneurs is just the minute that you quit the jobs you don't want to work on. But for him, it's true retirement. So we quit and we retired the same year. And he actually, the first 2 years, he's like, are you sure? Are you sure? Are you sure? I'm like, hey, it's already done that. Like, yeah. So, but later on, see the success. He's like, oh, I always thought you had the entrepreneur spirit. Like,
That's awesome.
yeah,
So wait a second. You guys, you and your dad retired the same year?
yes. And
That's awesome.
Yeah.
Just think about the
Yeah.
significance
It
of
was
that.
a 30-year difference between our age.